So what I'm going to talk about, initially I'll make an introduction. I'll talk about startups, some startup statistics. I'll talk about the startup ecosystem as a whole. I'll talk about some challenges that startups have to face and why some startups fail. Subsequently, I'll dip further into the investment landscape, and I'll talk about the last decade, what happened in the last decade, and then I'll focus on the last 3 years. And the last part of the presentation, I'll analyze the CE investment landscape. We'll talk about some case studies, some unicorns, and we'll sum up with some key takeaways. So some interesting facts about startups. For the people that are in the field, they know that the United States is the leading country by the number of startups. There are about 72,000 and 72,000 and a half startups in the United States. The highest value private startup in the world is ByteDance. Does anyone use ByteDance here? No? TikTok. TikTok, yeah. So it has a valuation of $223 billion. Next point is that over 69% of startups companies started as home business. So many times I've heard like some people, they had problems that they couldn't find products outside, and they started like working on the products themselves. So and then at the end this became like a startup. Another fact is that only 40% of startups are able to become profitable. So like less than half, 40% of startups, they become profitable. And next point is Quibi. Has anyone heard about Quibi? So Quibi, as said, here's the most expensive failed startup because they raised 1.7 billion in funding, and after a couple of months or years, 2 years maybe, they lost all the valuation and they just dissolved. So Quibi was kind of like a Netflix, but for like short films. So like it was like the idea was that because like we are very busy in our lives, we use like the metro, so we have only like short breaks. So the idea was like to follow films, movies, or like documentaries on like 15 or 10 minutes in the metro or in the bus as you go to the gym or as you are going to the office. But they started the idea before the pandemic, before COVID. So in 2019 or 2020, like few months before the COVID. So when the COVID happened, people had more time. So there was no demand for this kind of product because people were staying at home and they were just had time to watch documentaries like normal movies. So then they collapsed. Some more facts. Founders who have failed previously have 20% chance of success, while first-time founders have an 18% chance of success. There is one more statistic about this. A founder who has had a successful startup and he's going to build the next one, he has 30% of success. Next point is, that's well known in the VC industry, like 90% of startups will. The investors, when they're doing like their portfolio management, they know that 9 out of 10 startups will fail from their portfolio, and they'll get all their return from one startup. Individual venture capital firms receive more than 1,000 proposals a year. So like the startups, they get at least, like that's on average, 1,000 pitch decks a year. That means like it's about, I don't know, if you divide by 10, like 100 per month. So it's like about, 100 per month. So it's quite a huge number. And also depends on the on the venture capital because some venture capitals are much more famous, so they receive more pitch decks, some are less, so they might receive like 500. And then again, about the success rate of unicorns, about 1% of startups evolve into a unicorn, like Airbnb, Uber, etc. Last point is that startups founded by women are more likely to be successful. And they also tend to generate higher revenue and requires less funding. So that's another interesting point. They should teach us how to do it, how to manage the startups better. Okay, then I have another quiz. Next question. What is the average age of successful startup founder when they start their first company? Oops, what is that? Oh. Okay. So somebody is leading the round. So the answer, this question, there was like a study done by Harvard Business Review, and they specified this question more, like they specified what type of founder. So they were looking for founders that they have been invested by a VC, that they had many employees from STEM background. And they were tech startups. And the answer is 45 years of age, the correct answer. Yeah. So if you're below 40 or like in this, you can start building the next unicorn. Is that startup phase. Sometimes founders, they have unrealistic expectations. They might get like a success story, but the successes are like short term, and they have big dreams after that. So they kind of fly on the clouds. So they have to be like more realist. Another challenge that they have is hiring suitable candidates. And I mentioned birds of a feather flock together. So it's quite challenging, and especially at the early stage of a startup to have the right team. So you need like complementary skills, but also you need like share like the same vision and share same target. Next one is pivoting. Many startups, they start with the product and they believe in the product. They think that the market needs it, but it might happen that market doesn't need the product. And to pivot. Pivot means that you change the product. Instead of having these kind of features, you change it either completely or you bring different features to the product. Another challenge is financial management. Money begets money. So as like the revenue increases, also the cost increases. So if startups, they don't manage correctly their financials, if they don't calculate correctly their runway, they might get out of money, and when you don't have money, you have to work for somebody else. So that's another challenge that they face. Then I mentioned cybersecurity, like there are many hack attacks to startups. So it's a big problem now in the digital era. Fierce competition. It's like like a jungle. We have to fight for in the competition, and then winning the trust of customers. So the customer is the king, because customers are the real force behind the startup success. If nobody's buying our product, there is no success in the startup. So, and then I put this image here, and I'm citing, if a man puts a gosling into a bottle and feeds him until he is fully grown, how can the man get the goose out of the bottle without killing it or breaking the bottle. So you like feed the goose and it grows up and then it starts suffocating. How do you get the goose out of the bottle without killing it or breaking the bottle? Do you have any ideas how you're gonna do it?
Take it out the bottle before it grows.
No, there. You don't say the answer. So the idea, we talked about fierce competition before, and we are talking about startups. Imagine that the startup is, the goose is our startup, and we are growing. And then suddenly we feel that we cannot grow anymore because we have different perceptions about what we can do, or different perceptions that we get or from this feedback from the society. So the idea when you are in a fierce competitive market and you cannot grow anymore because of the mores of the rules, the idea is you don't follow the rules. You just either die or you break the bottle in the startup world. Startup fail. As we mentioned earlier, 38% of the startups, they run out of cash or they fail to raise new capital. So you always have to be aware how long is your runway and when you need to start speaking to investors and approach and ask for money. Second reason is that there is no market need. So some startups, they believe in their product, but the market doesn't need the product. That's 35%. Third reason, got out-competed. There are other startups that they either copy them or they bring other features, and then they start losing their share in the market, and then they just. Fourth reason, flawed business model. Sometimes the startups that don't have the right pricing policy or the right go-to-market strategy. So that's another reason. And fifth reason is the regulatory legal challenges that they have to be aware of. So how do the founders how they should be prepared? So first of all, they should study the market. So let's say you want to expand in a new market. You should know if the market is going well, not going well, what are the needs in the market. You can talk to other players in the market, etc. Learn from other mistakes. Again, how do you learn from other mistakes? You network, you read papers, you go to events, you follow the news about entrepreneurship, startups, and so on. Improve decision making. Yeah, this is also very important because, as we mentioned, the team is important, especially the early team. So hiring the right people, making the right decision on hiring, it should be a very important factor. And also what they used to say in the startup ecosystem is that hire slow, but and then fourth reason, increase investor confidence. So that's what we will be talking with some of the startups from here. How do you increase investors' confidence? With constantly talking to them, updating them with the developments of the startup, and being creating a bond, building a bond with the investors. So now we'll talk about landscape global. So this is from the last decade, from 2012 to 2002. So we see how much money has been invested by VCs globally. So we see there is a trend, an upgoing trend. And we see in 2021, there was a big leap, a much bigger raise in the investments, and then they started going down again. So what's the reason? Like what happened there? Do you have any ideas why from 2020 it went so like drastically immediately to a valuation, an investment of $734 billion of dollars? Any?
No, it's overall market
inflation and a lot of cheap money. The market get a lot of cheap money.
Okay.
Yeah.
It was COVID, everything what was digital just boomed.
Well, I think otherwise, in 2021 COVID ended, and in 2022 the war in Ukraine started, which kind of had some economic impact on the world.
Okay.
But it didn't readjusted. It boosted during COVID, post-COVID, because we lost and all the money available and people sitting at home and doing whatever startups they want. But then it just readjusted to the normal trend.
Yeah. So 2000 breaking every record. Okay. So the markets wanted to capitalize on the strong momentum of 2020 when COVID started, which was a year defined by the pandemic, a changing consumer landscape because the consumer started like being at home, using different products like delivery apps, working from home. Then also the year was, there was like robust activity in the healthcare and technology sectors. In terms of, again, like in healthcare, many VCs invest in healthcare because of COVID and anything related to it. So in 2020, the amount raised per fund was far greater than the amount raised per fund was far greater in 2020. So they had a lot of money, the VCs. So VCs put money to work in record amounts, with 2021 seeing 27% more deals closed than compared to the previous years. So now we'll just focus more on the last 3 years. So we see 2019, and then we see an increase from like 2020 to 2021, and then a sudden decrease from like the Q1 of 2022. And in 2023 Q2, we see also like a decrease quarter over quarter from like of 13%. So going from $69 billion to $60 billion. So like in terms of number of deals, instead from 7,500, 600 deals, it went down to 6,400. So. We'll talk about this. So the next question: which factors influenced the venture funding fall of 2022? So the next question: which factors do you think influenced this fall? Okay, time's up. Well, oops. So, in 2022, there was financial instability. There was an uncertain economic picture, the plugging tech industry stock prices, and growing recession fears. So the market was afraid of potential recession, and the war in Ukraine also escalated the situation. Another prominent factor behind the steep drop was the stock market turmoil, causing the tech startup valuation to plummet, freezing the market for IPOs, resulting in widespread tech layoffs. Also, there was huge inflation, increasing inflation, so that's why like government starting raising interest. So they were trying to reduce the amount of money in the market. So like usually, like how do investors invest? Like when there is a recession, they invest less in risky investments, and venture capital and startups are are the riskiest investments in a portfolio. So that's why big asset managers or investment managers, they were just stopping investing in VCs. So that's why suddenly the VC investments went down after in 2022. So here we can say the change in capital invested, the difference between 2023 and 2021 by region. So we see in China, like almost everywhere, is 50% less investments. 3 billion, it went down to 42 billion. In the United States, again, like from 300 to 153. In Europe, the same, from 106 to 51. And the rest of the world, a little bit less, from 143 to 77 billion. Next one. Okay, so here we see the same trend, but we analyze how it impacted the different stages of startups. So we see like angel seed, like the very early stage startups, they were not impacted that much as the next stages. So angel seed, not very impacted. The early stage, a little bit impacted from Q1 of 2022. The investment fell down a little bit. The biggest impact was in the late startups. So like from Series B, C, D startups, they were more impacted by the macroeconomic situation. And then technology growth slightly reduced as well. Okay, so here we see it again from a geographical perspective, the same graph. North America had the most impact. They were heavily investing in 21 until the last quarter of 21, and then they started decreasing their investments. Asia on a smaller scale. Europe, same. The most interesting fact was South America. South America, like here, was one of the fastest growing regions by number of investments. And then suddenly after 1 year, from like 21 to Q4 of to 22, the volume of investments reduced from by 83%, 84% in 1 year. So, but founders were responding to the adjustments, to the reality. So what happened? During the recession, there was a valuation reset of the startups. And like the median enterprise value to next 12 months revenue multiple of public SaaS companies fell to 5x, and before the recession it was like 7.8x. So that means like the valuations of the startups fell in 2022. This also caused layoffs of 185,000 global tech layoffs in Q1 23, 6% in Europe, and this was compared to almost 165 layoffs in the whole of 2022. So like Q1 was like a huge number in comparison to the rest of 2022. And another phenomenon was the down rounds. So what's a down round? The startups, they get invested, they have different rounds of investment. So each round, they start from early stages like seed or angel investment. They go to Series A, Series B, Series C. The logic is like the next round that you raise money, your share should be more valuable price. But in our case in 2022, when they were raising a next round of investment, the price of the share of the startup was low, at a lower valuation. So we can see it here as well. So what does this graph shows? This graph shows the share of down rounds in the startups. So in 2023, 2 out of 10 investment rounds, they were down rounds. So that means 2 out of 10 startups that they raised money with a price lower than the previous round. And that was not the case before. Here we analyze the different stages of the startups. So we see like the later stage startups, like big startups which have like bigger valuations, like a couple of millions, 300, 400, when they were raising the next round, because of the down round, their price was more impacted than the earlier stage startups, like seed stage startups, where they start their entrepreneurial journey. So the impact was more on the late or the growth startups. And this graph talks about the layoffs. So we see a peak here. This was the COVID peak, and then this is what we analyze now, that the Techstars, they started laying off their employees. And then we have the voluntary departures as well as another line. Okay, so now this is how, like what kind of investments went into different sectors of startups. So most of the investments in 2022 went to artificial intelligence startups. Then we have fintech, we have life sciences and healthcare, and then manufacturing and robotics, blockchain, clean tech. This is changing year by year. So I would say like in 2023, clean tech is more important than in the past. Say it again? It's related to sustainability, environmental impact. So then here I like unicorns. So here we see the graph of unicorn is very similar to the graph of how VCs invests. So these are the numbers of unicorns that in each quarter. So we see in 2021 there was a huge, because there were huge investments with huge valuations. So that's why we had so many unicorns. And then when they started cutting the money from the market, being more concerned about the price of the startup, the unicorn started dropping again. But we see in 2023 there was like an increase of 20% quarter over quarter. So like from 15 startups that appeared in 2023 in the first quarter. In the second quarter we had like 18 startups. Okay, and these are like the cities, homes for unicorns. So we can see concentration like in the US, in the East and the West. Then we see Europe, like around Berlin, London, and Belgium, there, like Denmark, and then we see a hub in China, close to Beijing and East China. Yeah. So now we'll talk about C more specifically. So VC investments in C for the last 2 years. We see like the number of investments was kind of not very affected by the entire landscape that we discussed earlier. But what was affected, the valuation of the startups was affected. So for example, we see here there were fewer investments but with higher valuations. Then here we had a little bit more investments but lower valuations. So this number shows like the number of transactions that happened. This column shows the valuation of the startups that they got invested. Okay, so now we'll see, according to this, CE is one of the fastest growing region in Europe by enterprise value. So what does this mean? This means how fast the valuation of a startup grows. So the global average is 3.3. So like it gives you'll understand it better from here. So in 2017, the startups were valued 6.9 trillion globally, and in 2022, the startups were valued 22 trillion. In the European average was 3.1, and then the Nordics average was 3.6, and then we see in the CE, the startups, the valuation of the much faster than the rest of the world and the rest of these regions. Awesome. The point is, the idea is that they count startups from 1999. So here now we are more technologically advanced, so we have more tools to kind of grow faster. VC investments by country. So here we see like Estonia has received almost like more than 200 million in the second quarter of 2023. We see Poland, Romania, Czechia, and also Ukraine. Ukraine, although there was a war, they were quite, they continue working their startups. They either moved to different countries or they moved, so just they continue their operations. Many Ukrainian startups, they have also, they're quite diverse. What I mean, geographically diverse. So many founders or many team members, they live all over the world. So it's quite easy to kind of continue what you were doing previously, unless you were in Ukraine. And at the end, we also see there is Moldova there as well. So here, there are some the countries with their unicorns that they have created. So I don't know, but like I've heard about Bolt. I've used Bolt. There's Printful, which is like print on demand services. There is Vinted, where you can buy and sell secondary, like used clothes. SiteGround, I'm using it for like, for domain and stuff like that. And then Grammarly from Ukraine. That's quite like famous unicorns coming from Central and Eastern Europe. Here again we focus on the unicorns. So here we see the number of unicorns in Europe in comparison to CE. So we see again like the same trend as before. In 2021, more unicorns than in the previous and the next year, and same for the CE. So like in 2021, Europe had like almost 75 unicorns, and the CE ones were about like 17, 18. And in terms of the most popular verticals for unicorns, fintech was one of the sectors, enterprise software, security, and energy. In CE, we had again like enterprise software, fintech, health, and transportation. I like this term, CE, Sunicorns. So these are startups they might become unicorns in the near future. So like Printify, I don't know all of them, but like some startups from Ukraine that are based on their valuation. So let's say they might have valuation of 500 million valuation. So 1 billion valuation. Okay. So next quiz is which stage of startup was most impacted by the down rounds? We talked about this earlier, and I will just open the... Time's up. So yeah, the correct answer is the late stage. As we mentioned during the down rounds, the startups who were valued more were impacted the most. So key takeaways from what we've discussed today. USA is the dominant player in the startup world. Startups founded by women are more likely to be successful. AI is investors' favorite sector. And there are too many reasons why startups fail. No market need and run out of cash. And last but not least, VCs are still investing, though in terms of your question was if it's more difficult to raise money right now. So yeah, investors, as I mentioned there, they are more skeptical on their investments. So you can get an investment, but it's much more difficult than what you have. The conditions more difficult than 2 years ago.
The other thing I've heard that you do get an investment, I mean, not anywhere, but you do get investment, but you're not closing the round. Pending with investment result until the better stages when the rounds are closed. Yeah, there are the different tools that you can play around with investments like either safe, convertible notes, bridge rounds and stuff. Thank you very much. That's it. Yeah.
So now questions. Please present yourself and what you're doing.
Hello, my name is Sergio. We have a startup called Meet and Eat. I really like the presentation that you have done. Thank you, great job and great slides. However, I really hope to have some more practical advice on how to negotiate, because most of the people that I know here are startups where some of us haven't even had the first round, the angel investment. Some of us are hoping for the next stage. But can you give some examples? What is the best way to, what is the strategy to discuss, to talk, how to talk to an investor, what to offer? Like anything that could be more practical rather than, overall picture, which is good to know. But for us being small, we're looking at what the small steps can we do here rather than know what happens in the world. Thank you.
Yeah. First of all, you need an investor database. So you create the investor database according to some criteria that you are interested in. So you might look for investors that invest in food, tech, or is it related to food, you said? Yeah. And then you check what kind of stage they invest in, what kind of region they invest in anyway. So, and then you keep them in the loop. So what I mean by that, you have the investor database and you start like month by month updating the investors with your development. How is the startup developing? So, and then when you're starting kind of going for the raising the money, you start getting commitments. So you start asking them, would you be interested in committing an amount of money to this round because I'm raising? So you get the first commitment. That's the most important, to get the first commitment. Once you get you then go to the next investor and you say, hey, these investors have already committed this amount of investment. Would you like to join the round? So that's how you talk to as many investors you would like. So once you see how much money you can collect from all these investors, then you can play with the terms there. Because if you see a lot of interest, you tell to the first investors, yeah, we are agreed on these terms, but there is more demand, and I think like the other investors, and I believe that the valuation of my startup is higher than what we agreed. Do you mind to slightly change the terms according to my valuation? Also, you talk in the market. You ask other people that are doing something similar to you, or you ask advice from other investors, because like generally the investors, they talk between them. So know what kind of valuation you might worth. So it's a game of searching. That's what I would say.
Thank you so much for a great presentation. I enjoyed it a lot. I haven't seen in general much data on Central Eastern Europe. It was very interesting to learn. It was also interesting to see that Moldova is not on the map of, not unicorns, but even not so unicorns. I know that it's your 4th day. It's your 5th day tomorrow in Moldova. You've already seen a good number of startups. Can you give us your appreciation, considering your background in investment? How do startups in Moldova are investable and why? And what would you, as an investor, make invest in Moldovan startups? Or what are the triggers that would make you interested?
Okay, so from what I think, the startups that I made, I think there is power of, there are good minds here in Moldova, very with like STEM background, very entrepreneurial mindset, that don't have the necessary resources here in Moldova. That's what I'm seeing. And also another thing is that sometimes maybe their like imagination is too local. I want like people to think, I will conquer the entire world, not just Romania, Ukraine, and Moldova. So that's one thing. Why I would invest in. So as we showed earlier, rate of increase of the valuations of the companies in CEE is much faster than the rest of the world, the rest of Europe. So that's one indicator that the CEE as a region is increasingly, like, in terms of entrepreneurial journeys, it's developing much faster than other regions. So that's the big perspective. The smallest perspective is that you have like local knowledge here that you can kind of test the markets in Moldova, Romania, and around. And then once you have tested, you can go very fast with cheap employees, cheap staff, and expand. That's one thing that I would consider right now. Yeah, and I know like Moldovans, they're quite entrepreneurial, and they don't have hard. Nothing will stop them like exploring and expanding in markets. But I need a huge imagination, big imagination. That's what I want to see.
You want us to think more global than we are thinking now?
No.
Oh, good.
Hi, Andrei.
Salute.
I'm Alex. And in one of your slides on why startups fail, one of the points was because the co-founders have higher expectations. And I often hear in this kind of places that why don't you think more global? Why Eastern Europe? Why not global? So doesn't this lead to higher expectations when?
Yeah,
so
but
this is the question.
Sometimes I see in pitch decks, my dream is to. When I see my dream is to, I said, oh no, it's not a good pitch deck, because they are like kind of in a dream world. They are not realistic. So what I want to see in pitch decks is like, these are our milestones. This is our next step for the next year. I don't care if in 10 years you're gonna be a unicorn, but show me that you're making progress in the next 1 or 2 years. So when you're like kind of more like landed down. That's how you make the process, the progress, step by step. If you are thinking, oh, I want to expand next month in Romania, after 3 months in Ukraine, and then in Europe, and then by the end of the year I want to be in India. Okay, if you can do it, if you can get so much investment, and you have, but it's much more. It's not very realistic when you think too big without taking small steps.
So it depends on the time span.
On the
On the time.
On the timeline, yeah.
Thank you.
Hi, my name is Alex, a founder of Enviro Green Tech. I really like your presentation, thank you, especially statistic, it's really nice. So my question is, could you suggest for me, for us, how many time should take startup to communicate with investor to process a deal? For example, as you said previously, startups should play with terms with investors. I would like to ask you how many time?
Yeah, so like this is a strategy on how to approach investors. So the first thing that you should do is should find your runway. You'll know, like in 16 months, I will run out of. So if you in 16 months you will run out of cash, you have to have secured your cash in the bank account, like at least 3 months before, before the 16 months. So in order to have this money on the 13th month, you have to start communicating with investors much earlier. So first you start this strategy that we discussed earlier, creating the database of investors. Once you have the database, you are trying to find people who can introduce you to the investors. Because if you are introduced, it's much easier, and it's more personal to talk to the investor.
Hot connection, right? No, not
Yeah.
cold.
Yeah.
Thank you so much.
Hi, Andrei. My name is Dorian. I'm also a young startupper, preparing for the future because I know I will start a lot of startups. Where I do the research and development in the best way, is it just analyzing what startups did successful in some niche, or how do you do it the best way?
Well, it depends what you are building. So what do you want to start building? Or what are you building?
Now I had a startup with a tool for exchanging contacts, but furthermore, I maybe pivot or change the idea or the niche in general. Yeah, the best way is to test the product. So give it to potential customers and get some feedback. And then ask, would you pay for such a product or such a service? Once you see that there is interest, then you can spend some, like on marketing strategies, or if you get the investment, you can hire someone to help you with the research and development. Does this respond to? Yes, you responded to like the actual startup, but if you want to change the niche, where do I find references for startup ideas?
For startup ideas?
Yes.
ChatGPT. There are, startup ideas. Read articles on like Forbes, for example, about startups. They many times talk about like upcoming startups, new ideas. So that can also trigger your mind, and you can become more creative, and you can start. You can also follow the early stage startups, what they build in different databases like Crunchbase, for example. So you follow them and you see like what's coming up, the next upcoming startups, and you can kind of copy them or create something similar to their product as well.
Okay. So the second question is, by working as a business development team at MediaCore, I do work with local startups and write proposals for US grants. So the startups we are pushing are joint startup by actual present environment. So more exactly, we do a startup in health tech. We introduce it, the startup term now, but it was working years before it became a startup. So the question is a good practice to join like actual working environments into your startup?
To join working environments in your startup?
To create a startup based on already working solutions.
Yeah, like a new version of the old tools. Yeah, I mean, why not? If you think the market needs it and you make it in a nicer way, or you bring some more features or a better solution, yeah, it's even easier for you. You have already the know-how how to do it.
It would be interesting if there was some stats based on this. If the startup was created from scratch, or was
usually how the startup begins, like when people spot a problem and nobody is solving this problem in the market, and that's one way. Another way, when you work and you see that you can kind of automate some tasks, you have the experience in your field, and you can automate it, or you can include some, combine it to other tools from other sectors, and you create a new startup as well. So there are different ways on how to start a new startup.
Okay, thank you.
Hi, my name is Andrei. Thanks for the presentation. I saw the number that is a little bit pessimistic, is that 90% of the startups fail.
Yeah.
But I hope everyone here is optimistic, and I'll try to ask you a question. Let's imagine that all of us have a great idea and that we think that this will be a good product. And all of us probably start with our own forces, but there is a moment when you think that you need to go to an investor. So my question would be, what would be that signal that now is the proper time to do this step? And maybe the second question, if you can answer both, what should be the focus when you speak to an investor? What you should present, or what would be your target there and how to reach it? Thank you.
So the moment would be like, it depends on the startup, it depends on the stage anyway, but let's say like an early stage startup with first time like kind of figuring out what is happening. So let's say that you have created a solution and you're giving the solution to the market, yeah? And then you feel that you can give even more, but you don't have the right stuff or the right amount of stuff to expand, to scale. And the only way to do it is by getting an influx of capital. So when you feel like in the goose in the box, in the bottle, when you feel that, okay, I can do more, but if I continue like as I am right now, it will take me 6 months, but if I get an investment, I can do it much, much faster. So that's one way to see it. It depends on what stage, what you are building, because like hard tech startups, they are very hardware tech. So in their case, they do a lot of research and development, so they need to sustain themselves. But I suppose I answered the question. And then the second question was about
when you go first time to an investor, what you should speak about.
Which you should talk to him. So first of all, you should explain that there is a problem in the market that you solve. Secondly, you should talk about how big the market is in your niche. Then you should talk about traction. That's very important for them, and also like presenting how is your MRR going, monthly recurring revenue, how fast is it growing. It's also very important because they see that you are pushing it and you increase your revenue. Then you have to believe yourself in the startup as well, because if they see that you're hesitant, they might hesitate as well investing in your startup. And then they say that getting an investor, it's a long it's a low commitment. It's at least like 10 years relationship. So many people say that this lasts longer than a marriage, because on average, I think globally 7 years is the period of marriage. So it's a process of like knowing the investor as well, because maybe you might not like the investor personally, so you don't want to see him. There is no chemistry between you, or maybe you need investors that they know their market well and your market well. So you need those kind of investors. It's not only about money; it's about how they can, or how you can use their network, or like because they have invested in other startups, they have a portfolio startups. So you can, if you join him, if he invests in you, you can use like the synergies, like startup synergy, portfolio synergies, where you can use customers from other startups to your startup. So it's more it's a strategical decision. You don't get just for the money, you get for his mind and his network as well. But yeah, what you talk like attraction, there is a problem, there is market need, the people want good feedback, testimonials. These are the factors.
Thank you. Hello, thank you for your presentation. I have a simple question. Let me present myself. Sergio, I'm growth manager at Core Lab. Where we can find investors, or how?
Okay, so going to events, like in London, they have so many events with startup founders and investors, networking events, joining webinars again, and then they doing like web research, looking for like VCs, and then joining their like newsletter, because they might send emails, they might organize events, so you can go and meet them even in person. Then there are these databases, like as we mentioned before, like Crunchbase. There is OpenVC, very nice database where you can find investors. ShipShape. There are different platforms, databases where they all this information. So once you are in the database, you have access to their LinkedIn, to their website. You can contact them on LinkedIn as well, but it's preferable to be introduced to that investor. So kind of like networking and using all these tools. In like business schools as well, people they are doing MBAs in order to meet investors. Like at LBS, London Business School, the first day that they go there, they tell them, go and network. That's it. So it's about networking.
Okay, thank you very much.
You're welcome.
Thank you a lot for the presentation. I'm Vladimir, I'm director at Sigmoid, an organization which helps people learn about AI. We do projects and events about AI. My question is, for example, when a big company raises a seed about, I don't know, $6 million or $10 million, when this company fails, the only thing that they lose is the big company loses money and the small company loses its company, or there maybe are more agreements between the companies? Maybe are there more downsides that are besides the money thing?
Yeah, so like when they fail, so when their valuation will drop down, will go down, and then they will start like if they can, somebody else can buy this startup at a lower valuation, so they can kind of continue the operations, but else. If nobody needs it, they just sell the assets. They share the profits from the transaction, and that's. I haven't been in a situation where like this thing happened, so I might not enlighten you enough on this.
Thank you. Thank you.
I heard something. When startups fail with big investment, like investors lose money, but the startupper, and he dies, he goes to
Very interesting, thank you.
My name is Victoria. I don't have a startup yet. My question is, you said that first time when you want to approach an investor is when you have tested your idea, you put it on the market, and then you want to expand, and then you go to first time to an investor. So that means that first time is when you want to expand. But what about testing stage? Are there investors that want to invest in testing stage, or we have to found somewhere else?
Yeah, you can start this relationship even before your idea, like as friends. Like, I mean, there's an investor and you think, oh, I might become entrepreneur in 2 years. So you play tennis with him, you go for drinks, and you build this relationship. When you have the idea, you can share your idea, because there are angel investors that they invest in ideas. But in this case, you will lose if they invest in your idea. It's a bigger risk for them. So you'll allow equity to the angel investors. But like the relationship can start even earlier.
But what are the ways we can find? For example, we need a team, right, to make an application, or we need money for this. This is testing stage, right?
Yes. So you need the idea first of all. Then you start building. You start building a beta version of.
On what money?
On what money? You find a co-founder with a computer science background, and you tell him, "Oh, I have this idea." The point is to persuade people. So if you cannot persuade a co-founder, it will be much more difficult to persuade an investor. So you have to say your story in a way that you will persuade somehow to join you on this journey. So, and then it's much easier to build with a team than building yourself.
Thank you.
Hi, I have startup about parking, Airbnb for parking, for private parkings. And my question is, how much money can you ask, for example, on seed round? How can you
determine how much?
For example, can I ask 20,000 or 200,000? How can I? What worth of me is? I don't know. What can they say to me? I don't know.
So there is a reason that you need the money, yes? So you need money for some reasons to
expand.
To expand.
Yes.
So you put down your logic, your thoughts on paper, and you write all the costs that are involved in this expansion. So like it can be hiring new people or developing a new product or your new app. So you put all these costs down, and once you have calculated everything, you know how much money you need to build this thing. And then you go to the investors and say, hey, I need this kind of money to achieve this. By hiring, I don't know, like marketing strategy, I will reach this amount of audience. Out of this audience, the conversion rate is, I don't know, 10%. 10% of this audience will become my customers. Out of these customers, I will get as revenue this amount of money. So if I get...
Sorry, but it is not real information, it is just my thoughts.
Yes, it is your thoughts, but if you get the money, that's how you're going to use the money in order to achieve that point. Our thoughts, Apple was a thought, so everything, yeah.
Okay,
so it's kind of explaining why you need the money, how you're going to use the money, how you're going to allocate the money in order to achieve your 6 months or 1 year goal. It depends on the stage of the startups. Usually, like, you can check historical transactions. So you can check startups that are similar to you, how much money they have raised for how much equity. Well, you can, I mean, you can find, if you are network, say it again? Yeah. Yeah, I mean, that's when you have the network, you might find out. But another thing is that you also use the multiples. So let's say enterprise value by revenue in your industry is 7 or 8. So if you know how much revenue you have, you can find your enterprise value, and then you know how much you want to raise. So if you divide those two numbers, you can get the equity that you can offer to the investor.
And if it is pre-seed round and no revenue?
Usually like at a very early stage, there is like kind of, not a rule, but like investors and founders agree, like if it's like an angel investor, he might get from like 10% to 25% for putting in like 20K. So it's nothing standard there. You have to check the market again. You have to, like usually like when you are an early stage startup, you kind of ask money from your friends and family, so you can get like 10K from your friends and family, and
My
you give them 10K.
family is in Ukraine. We are from Ukraine.
Yeah, or close friends and stuff like that. So you take 10K for 10% of equity. You can have like 1K for 1%. There is no standard rule. It's again how you're gonna persuade your potential investors how much you are worth.
Thank you.
Hi, my name is Christian. I'm working with the startup ecosystem, trying to develop it here in Moldova. One direction that we are quite curious and haven't gotten to a clear answer yet is for developing deep tech startups, the one that you need a little bit more research and development time, where there's going to be no money for 2-3 years. What are the sources of funding outside the academia and the research grants that could be accessible for startups in this area?
So outside like grants from the European Union and...
Yeah, so let's say OpenAI, okay, Sam Altman had a lot of access to capital because of YC and his connections there. But building something of that type out of Eastern Europe.
Yeah, again, like there are investors that invest in this. They know their journey, so they know that for the next 2 years you won't make money, but if you persuade them, like they will invest in you. You have to just open your reach instead of just looking for investors. Maybe here, look for investors, deep tech investors in other countries, outside the grants and these kind of programs.
All right.
Hello, my name is Yelena. I'm a part of the team. We have 2 little startups. We are at the beginning stage. We have potential clients and we have interest from them. It's a bit, doesn't matter. My question is this. What is the logics or what is the best practice to how we need to divide the shares between us? Mm-hmm. We are in the initial stage. We have client, we have product, we are discussing with client. In a few months, we will have this question to discuss. And all of us, we are 4 people, we have different background, and somebody is technical, somebody is sales, marketing, and so on. Different people. Thank you.
Yeah, my approach is to kind of be divided equal. If you start especially from early together, it's kind of split the shares equally. But there is also on Y Combinator, there is a paper about this, and what they suggest is the same thing. Even if I have started the idea myself like 6 months ago, and another guy joins me after 6 months, but he's the core team, more or less will have like a equal share in the company. But I mean, it depends. Yeah. Thank you very much. Thanks.
Thank you.